Hi, today we are doing a presentation on the first episode of the Ascent of Money, Dreams of Avarice, and to explore the concepts presented in the episode, we came up with the following question: how has money come to play such an important role in our society? To answer it, Tariq will start by introducing the concept of money, then I will present the Inca Empire, afterwards Gerard will explain the evolution of the banking system, and finally Mark will analyze our modern economic system, and Marina will conclude the presentation.
The word money can mean many things. It is used with different connotations in our everyday speech. On one hand, if people say that a person has a lot of money, they usually mean that the person is wealthy, while on the other hand, to economists, money has a very specific meaning. They define money as anything that is generally accepted in payments for goods and services or in the repayment for debts. No matter whether money is gold or paper, in any economy it has three functions. It is a medium of exchange, a unit of account, and a store of value. In our world today, money has become an essential tool that people cannot live without. It has become an all embracing medium of our society. Its significance has extended far beyond negotiating economic transactions and depicting them in terms of value or the safekeeping of wealth. Nowadays, people not only use coins and dollar bills issued by the government as money, but also use checks and credit cards at an increasing rate, to the point where banks are now able to move millions and millions by just clicking a button on their computers. Worse than having a money based society is having no money availability. If banks do not exist, loan sharks will emerge and this will hold back economic development. We perceive money as an aid for economic exchange, put it on one side as savings, and use money units for accounting. Money is a means to economic ends. It is like an unwritten label, which stands for everything that you could buy with it. The realization that money itself is actually nothing has become widespread. Nobody finds it a problem that money is not stored, but is saved as a sequence of numbers in a computer. Paper money no longer has to be backed up by central banks with its real value in gold. Nothing about our whole civilization could be imagined without money and the way it functions today. Although the people in history might have lived through the exchange of goods and not relying on the value of money itself, modern society cannot function without it. Money plays a huge role in society in a variety of ways, such as in businesses, at people's jobs, and even in education. Money helps people achieve a larger chance of business success, a better quality of education, and higher work output. In the upcoming slides, you will come to find out about the history of money and its evolution to where it stands in our society today.
To start, we decided to use the example of the Inca Empire as mentioned in the episode to illustrate the evolution of money through time. To briefly present the empire, the Inca civilizations emerged in the 13th century and was the largest polity of the ancient Americas, with an empire extended along the Pacific coast and the Andean islands, from the northern border of modern Ecuador to the Mo River in central Chile, and a population of about 12 million people. But what is the most striking about these empires is that 5 centuries ago it has no real concept of money and was using labor as a unit of value. In fact, the empire had plenty of resources controlled by the state, like agricultural land, mines full of precious metals like gold, silver, or copper, and water. These resources were used as the basis for the labor tax system called mita, while labor was rewarded. The Inca Empire was divided into 4 districts where taxes and goods were collected from each of them and sent directly to the ruling emperor in their capital, Cusco. The populations of each district were expected to contribute to the wealth of the empire by mining, farming, or doing other manual labor that would benefit the entire empire. For instance, when Mita laborers built temples, palaces, canals for irrigations, agricultural terraces, roads, bridges, and tunnels, they were rewarded by the states and were given in exchange food, clothing, and medications. However, when the Spaniards invaded the empire in 1532 with Pizarro, the whole system shifted. In fact, the Spaniards were driven to those lands because of the legends of Eduardo, with the realm of the gold-covered kings, and once they discovered all the resources that were available on the territory, they drew the Incas into forced labor. By doing so, the Spaniards were able to extract 2 billion ounces of silver to finance their wars during the 250 years they ruled over the territory, and brought chaos to the Inca civilizations. They killed their king and plundered their wealth. Hence, the labor tax system the Incas created ended as the Spanish rule took over the empire.
So in Italy, banking started developing and was already defined with similar characteristics to the banks that we have today. During Middle Age, Italy was one of Europe's main economic power, with increasing international trade. However, those transactions were very problematic, in part because of the use of Roman numeral, and also because in some places, for instance, 7 different currencies were used. This was solved by Fibonacci, who was able to apply mathematics into money by doing calculation with Arabic numerals. With it, money could move more easily, and so its power and possibilities started growing. In Venice, already in the 12th century, the Jewish community were tolerated as well as discriminated because they could make loans and charge interest for them, while Christians couldn't do it because it was a sin. The letters of credit, for instance, were created and very used by the merchants during long trips. There, the benches, which are called banchi in Italian, were the places where they sat and negotiated, and so they gave the name to the bank as an institution. Then, in the 15th century, the idea of credit moved out of the Jewish ghettos in Venice and began spreading around different cities in Italy. In Florence, for instance, the Medici family started increasing its power, first in economics and then into politics, religion, and society. The Medici Bank was created in 1397. In their first businesses, instead of getting interest directly, they charge a commission for the conversion of currencies. As it was not an interest per se, the Catholic Church couldn't accuse them for usury. In fact, the Church allowed their movements of money as it benefited their own interest with the collection of taxes around Europe. And one of the elements for the success of the Medici was diversification, with banking or speculation, but their main business remained the currency exchange. So finally, Italy saw the growing of money movement and the birth of modern banking in a time when accumulation of wealth was also becoming a synonym of accumulation of power.
Nowadays, it is obvious that financial power is a very important driver of the world, if not the most. Technological innovations have transformed the way we understand money and its transmission, and the system is now based on concepts like credit, debt, and modern banking. These represent several advantages, such as that money is much easier to transfer. However, the flaws are also numerous, and they have relevant consequences. Banks were the institutions designed for giving credit, limiting the risk of default, but it is obvious that this purpose is not very well accomplished at the moment. For example, as it is mentioned in the episode, between 1996 and 2006 there were between 1 and 2 million bankruptcy cases per year in the United States. The reason is that anyone can receive a credit, like in the times of the Medici. Banks simply assume that a proportion of the loans they make will be unpaid, but these are expected to be relatively trivial sums. Allowing people to get a credit without ensuring that they can return it has positive aspects. It is a way to promote entrepreneurship, and it gives second opportunities to people that didn't succeed at first. And Mr. Ferguson mentioned some very famous examples such as Mark Twain or Henry Ford. The problem is that the incentives to repay are reduced, so too many people default. Some banks act in a similar way. They take too many risks, they concede subprime mortgages and low-quality collateralized debt obligations, and they end up being unable to pay the clients back. The financial crisis of 2008 is a good example of what happens when this bubble explodes. Of course, there were also other reasons, but this partly explains why that disaster took place. A similar thing can happen with the crisis that we are living at the moment. The root problem is an excess of debt. Citizens and financial institutions should be more careful when spending and allocating resources, especially when things go well, so that they are able to overcome the difficult times.
As we have seen, money has made a very long journey until achieving the concept and meaning that it has today. As it has been explained in previous slides, money has not always looked as it looks nowadays. The fact that nowadays we feel safe having money that we can physically see would have been considered a completely craziness in the past. This clearly exemplifies the fact that money is about trust and faith in the system, and not that much about which physical form it takes. During the episode, we have been able to realize how vital money is for our existence, acting as one of the most, if not the most, significant pillars of human history. In fact, it is said that the ascent of money has been completely linked to the ascent of humans. That's why studying financial history is essential to understand why certain events took place in the past, but also in the present. Taking as an example the exclusion of Jewish. During the Medici period in Italy, Jews were associated with finances for the first time, as they were the only ones that could lend money to Christians. The price they paid for that was social exclusion, which one could think that was later exemplified in the Holocaust, which took place during the Second World War. This exemplifies the fact that we tend to underestimate the extent to which our civilization is based on borrowing and lending money, what today is called credit. Without credit, the entire economic history of our world would not only have been different, but also impossible. Money lending enabled people to satisfy their desire of avarice, that enabled societies to grow and transform the world as we know it today. However, we have to be aware that the desire of avarice has also created the weaknesses of our modern society, such as the cyclic financial crisis or inflation. So, as Neil Ferguson once said, money can both break us or make us. And that's all. I hope you liked our video, and here you have the bibliography we've used in order to make this video.